I'm the Tax Geek, and this is more of your taxes oversimplified. Today we answer the question, what is self-employment tax, and why do I have to pay it? Self-employment tax is a way for self-employed people to contribute to Social Security and Medicare. Without it, self-employed people would not be able to claim these benefits later in life. When you are employed by someone else, your employer deducts Social Security and Medicare taxes from your pay. Many people aren't aware that their employers also match the taxes deducted from your pay dollar for dollar. When you are self-employed, you are responsible for paying both the employer's and the employee's share of Social Security and Medicare tax. This is the self-employment tax and is paid when you file your tax return. As of 2020, the Social Security portion of the self-employment tax rate is 12.4% applied to the first $137,700 of self-employment income, plus the Medicare tax of 2.9% applied to all self-employment income. For taxpayers with self-employment income combined with wage income under $137,700, the self-employment tax rate is 15.3%. So that being said, who is responsible for paying self-employment tax? You are responsible for paying the tax if you are self-employed or a farmer who reports your net income directly on your tax return using a Schedule C or Schedule F. You are also responsible for paying the tax if you share in the profit of a partnership that you materially participate in. You are also responsible for the tax if you share in the profit of an S corporation that you materially participate in, and you do not receive a reasonable salary for the services you provide to the corporation. Also, certain members of the clergy are subject to self-employment tax on some of their earnings or allowances, but that's a story for another time. If your income in any of these cases is less than $400, or you have a loss, you are not liable for self-employment tax. However, once your income exceeds $400, the entire amount of self-employment income is subject to the tax. So now we know what it is, and we know who has to pay it. Now we ask, how is the tax calculated? If your combined wage and self-employment income is less than $137,700, the calculation is relatively straightforward. First, the net self-employment income is multiplied by 0.9235. Why 0.9235? All people who pay self-employment tax are entitled to reduce their adjusted gross incomes by 1/2 of the self-employment tax. This multiplication is done to assure that you are not being taxed on a deduction. Next, you multiply the result of the previous step by the self-employment tax rate of 15.3%. The result is your self-employment tax. And 1/2 of that amount reduces your adjusted gross income. If your combined wage and self-employment income exceeds $137,700, the calculation is a bit more complicated. Step 1. Multiply the income subject to the tax by 0.9235. Step 2. Subtract your wage income from $137,700. Step 3. Multiply the result by 0.153. This is the amount that is subject to both Social Security and Medicare tax. Step 4. You then subtract the result from Step 2 from the result from Step 1. The difference is multiplied by 0.029. Step 5. Add the results of both Step 3 and 4 together. This is the self-employment tax. To make it a bit clearer, here are a couple of examples. Bob is a self-employed electrician whose net income is $32,000. To calculate his self-employment tax, he multiplies his net income by 0.9235, resulting in $29,552. Since that amount is less than $137,700, he then multiplies the amount by 0.153, yielding a self-employment tax of $4,521. He is also allowed to adjust his income subject to tax by $2,261. Mabel has wages from employment of $84,000. She also materially participates in a partnership, and her share of the profits is $75,500. First, of course, she multiplies her share of the profits by 0.9235, with a result of $69,724. Then she subtracts her wages from the Social Security maximum, yielding $53,700. This is the share of her profits that are subject to both Social Security and Medicare taxes and is multiplied by 0.153, resulting in $8,216. The remaining profit, or $16,024, is subject only to the Medicare tax of 2.9%, or $464. The $464 is then added to the $8,216, resulting in a total self-employment tax of $8,680. And she can take an adjustment for 1/2 of that amount, or $4,340, to reduce her adjusted gross income. Self-employment tax is reported on Schedule SE, which is a step-by-step calculation of the tax. Here is Bob's Schedule SE, and here is Mabel's. Their self-employment taxes and their adjustments for self-employment tax are circled. If you want to know where these figures go on the tax return, click on the card above or the link in the description. If you have multiple business activities, they are combined on one Schedule SE. If spouses share a business activity, they each prepare their own Schedule SE with each one's share of the profits. And as always, there are additional details involving self-employment tax, particularly among farmers and the clergy. You can find more information in the links in the description. If you found this video informative, please give it a thumbs up and subscribe for more content. If you have any questions, comments, or suggestions for future videos, please leave them in the comment space below. Thanks for watching, and stay tuned for more of your taxes oversimplified.